Back to school sales are on. Is Denver on sale too? Hey everyone, it is Alyson Wall, your real estate strategist and realtor for the South Denver area. It is time for your July Denver market update. Let's dive right into those numbers. We had 5,500 new listings this month. That is down 1,300 from the month before. That also puts us down about 19% from the previous month. However, year over year, we are up 3.5% for new listings. 3,800 buyers put homes under contract this month. That is 300 fewer than the month before. Month over month, that puts us down about 7%, but still up again year over year about 5%. 3,800 homes closed this month. That is down about 100 from the previous month, putting us down about 4% from the previous month, but year over year up 4%. It may be no surprise as we're rolling into summer, the market is slowing down just a bit. The average days on market increased by 3, the median days on market increased by 5. All right, let's look at those July home prices. The average price for all homes closed is $731,000. This went up $20,000 month over month or 3%, and year over year also up 2.5%. The single family home price average comes in at $813,000, up $13,000 from the month before. Both the month over month and the year over year are up 2%. The condo and townhome average is rolling in at $474,000, up $40,000 from the month before, coming in at 10% increase month over month, but year over year we're still seeing us down 4.5%. So we're not seeing the trend line long term moving. We continue to just see a roller coaster in the attached home segment. All right, on to those median home prices. The median price of all homes sold this month is coming in at $605,000. That is an increase of $10,000 from the previous month, so just about a 2% increase. Yet year over year, we're down almost 1%. The median single family home price is $665,000, up $5,000 from the month before, so almost a 1% positive change there. And the same year over year, just about a 1% positive change. The median price for condos and townhomes is coming in at $415,000, up $15,000 from the month before, quite an increase when we're looking at median. That is a 4% increase month over month, but year over year, we're still down 3.5%. And list price to sales price ratio dropped 0.7% to 96.9. All right, what are your takeaways in this market? First, not a lot has changed. We are not seeing drastic shifts from last month to this month. In last month's market update, I expected we were going to see peak prices in that month, which was our June data. Typically, we see peak pricing in May or June, sometimes in July. Here we are in July seeing that prices are higher than the month before. So my expectation is now that this is our peak month of pricing. We have not seen that happen in August in our data for 20 years. The only outlier was when it was in October, the year that COVID hit and the whole market shut down in the spring and we pushed it into the fall. So something unique would have to happen, rates would have to drop and stick to push us into a later peak in the year. So this really should be our peak in terms of sales numbers, not necessarily volume, though probably, but in terms of pricing. And it was barely a push, but we did see a push on price from our buyers. Probably people who were late starters, had been holding out. We have had a lot of buyers move very slowly this year. And I will tell you, late June is the last minute really to contract on a house and then have your traditional 28 to 35 day closing, get moved, have sellers who might want to dilly-dally, have a short rent back, and be in with some extra time before school starts here. And that is why we see such a push in June for home closings. And conversely, why once 4th of July hits, things really taper off here. It's the slow closing of the door of buyer demand until roughly about Labor Day. And it is because school starts somewhere between August 7 and August 15, 16 for most of our school districts in the area. And if parents don't have a house, have an address, Many times they will go rent something because they don't want to be forced or pigeonholed into a choice. Especially in today's market, they have so much option. There is no need for them to rush this decision. The market is in favor of the buyer. And even renting, rent demands, rent prices have gone down. It's possible for someone to negotiate break lease fees, a shorter term, and it be much more sensible for them. So that is why in our market we see things shift right at this June, July transition point for most people. Yes, there are entire segments where kids and schools are not involved, but there's also summer vacations, people want to go play. There's just so much that moves our market in that direction. And then when we get to Labor Day, that window from Labor Day to about Halloween, 7-ish weeks, we get a little surge. People are excited. The weather's nice. The leaves start to change. It cools down. The nights are crisp. The weather's not bad. And it kind of opens back up. So sellers, you need to know that. If you are prepping to put a house on the market in this back half of the year, these next few weeks are actually some of the toughest weeks to launch your first few days on market, and expect it to be slower. Doesn't mean you shouldn't do it, because you may find people who are urgent, who are a cash buyer, who are ready to just come in and do what they can to get that house in that district, and they might be renting, whatever it is, but it's generally slower. And it's gonna pick up in those last few weeks before the holidays start. Now, that small increase in single family home price month over month that we saw in the median segment, right, just shy of 1%, that's the first time we have seen an increase in median single family home price since March numbers. So January, February, March, we had an increase. April, May, June, we had flat to negative numbers in the median. And so we had this little surge here for these July numbers, which I think ties into all that school talk that I was just sharing with you. And buyers, this really speaks to the opportunity before you. We are generally very flat in the median in terms of pricing. Our average increases are modest. The condo townhome, my gosh, we know they're a roller coaster. The next month they'll probably be down 35,000 or 42, right? So we watch those with a little bit of a tongue in cheek and analyze that data. But that single family home trajectory is pretty flat. So if the interest rates are working for you and you have the down payment, you are in such a strong season to be a buyer right now. I don't want you stretching. I don't want you doing an ARM. I prefer you don't do something with very little money down, especially if there's any chance that you may not be in your home for very long. Because right now we are seeing, as I mentioned last month, a lot of folks who are selling, who purchased in 2022, who didn't put a lot of money down. They were maybe a VA loan with no money down, and they rolled in their funding fee, which is how it's done, but it tacks on another $15,000, $18,000, $22,000, whatever, depending on their purchase price. And now they need to sell, and because our market has softened and corrected, they just aren't making money. There's no equity. And this is a struggle point for a segment of our selling population. And I don't want anybody that's looking at buying now to put themselves in a similar situation. So if you have the down payment that's substantial enough and it works in your budget today with rates that are around 6.75, this is a great time to get in and negotiate with sellers. Prices are going to continue to go down through the year. That's the natural trend of our market. And then next year they will go up again a little bit. If rates come down, as they may toward the end of the year, early next year, my gosh, we thought they were going to come down earlier than this, then I think we still have a little time because of all the inventory in the market for things to correct themselves. But as rates move down and the closer they get to 5, the more our inventory gets eaten up and the market shifts back. But with having over 12,000 homes available in our market, 8,000 of those of which are attached homes and 4,500-ish which are single family, there is a lot of inventory to be consumed before we get back to a hot, volatile, dog-eat-dog market. So this season for you buyers is really strong. Sellers, that means you need to be aware of every part of the selling season within a year and when to list your home, how to list your home, how to position your home. Sellers, the good news for you is we are not going backwards. We are holding very steady, and you need someone with you who's very analytical about the market, the seasons of the market, how it moves, when it moves, and how to serve you so that if you need to sell, if you want to sell, if you want to be a buyer in this advantageous market, but you need to sell first, then how do you position yourself to be one of the successful ones who sells in the first few weeks? All right, if you want to leverage the market to your advantage, understand the subtleties of different neighborhoods and suburbs, please reach out. I would love to connect. And I will see y'all next week.